Fortinet just reported their earnings and the stock is up by about 6.5%. Currently, they are at $111. Previously, about 2 years ago, I made a video when it dropped to $57 and I said it's a great buying opportunity. And I've shown the valuation in which I was predicting $126 stock price by 2027. So let's look into the most recent quarter earnings. The revenue was a beat by 4.05%. Look at the EPS beat, it is significant, 21% beat. Street was expecting 61 cents, they posted 74. For the guidance, they're saying the revenue will be in the range of 1.5 to 1.560 billion for the first quarter of 2025. And for the full fiscal year of 2025, they're saying they can make anywhere between 6.65 billion to 6.85 billion. That represents 11.5 to 15% year over year growth rate. If you recall, a while ago, I was picking between Palo Alto and Fortinet in the big players in cybersecurity. When I say big players, they make more than $5 billion of revenue in the cybersecurity sector. So I picked Fortinet because it was profitable, its balance sheet is great, they're also growing very fast at that point. So right now the growth is slowing down, understandably, because this is already a big company and there's a lot of competition in cybersecurity from the likes of CrowdStrike and Palo Alto Networks, Sentinel-1, Zscaler, etc. So remember this 11.5 to 15% year over year growth guidance. Let's look at the positives. Fortinet is investing in secure access service edge, a growing sector as enterprises adopt hybrid cloud and remote work models. End of support hardware refresh cycles. Analysts estimate 25% of Fortinet's active appliances will need replacement. Remember that they also supply hardware, right? So that requires replacement. So they're saying there is the potential $400 to $450 million in annual revenue. And Fortinet continues to enhance its AI powered security capabilities, helping organizations combat sophisticated cyber threats. The challenges are obviously macroeconomic uncertainty, IT spending fluctuations are impacting the demand for Fortinet products, and also obviously there is a lot of competition. Palo Alto Networks, Cisco remain aggressive competitors. So let's look at its valuation. So I already have 100% gain and I estimated $127 for 2027. It's already at $114, right? So it's way ahead of itself. So should I sell? For that, I need to look into the valuation. Before I show you the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Fortinet. So for 2024, they made close to $6 billion of revenue. I'm estimating 10% growth rate in the reasonable assumptions case because this is already a big company. There's heavy competition. In 2029, I'm estimating $10 billion of revenue. Based on the gross margins, I'm estimating 30% net profit margin and I'm giving it a 30 multiple. I only put 1% buyback. So with that, this company's worth will be $119 by 2029. Earlier, back in 2023, when I did the valuation, I estimated $127, right? Because I was estimating a higher growth rate at that time. But now cybersecurity is even more crowded and growth is becoming very, very challenging for companies. So that's why I updated my valuation. So currently they're at $113 and I'm estimating $119 in 2029. So that's 5% gain in 5 years, right? In my reasonable assumptions case. When I look at the great execution case, I put 15% year over year growth rate, 30% net profit margin, and a 35 multiple. So if that happens, it's $173. Based on the current price of 113, that's a 53% gain in 5 years. For my personal journey, I look into the reasonable assumptions case in which I'm looking at 5% growth, 5% gain in 5 years, and that's not attractive to me. So due to this reason, I'm going to sell half of my position and get my cost basis back. It's already 2 years since I bought the stock, so obviously I'll pay 15% tax. So I think that money could be put in new opportunity where there is higher potential for growth. And I could be wrong. Fortinet may go way more than this $190, but this is my valuation. My assumptions for growth rate, net profit margin, multiple, and the share buyback, I feel are reasonable. So, in my opinion, it's a sell. But again, I'm keeping half of my position. and I'm going to hold it. I can add to this stock if it gets back to the $60 or $65 level, because that's what is going to give me 2x in 5 years. Let me know your thoughts in the comments. Thanks so much for watching.